Welcome everyone to Rasa Samvada, which is a place where design meets dialogue and creativity intervenes with business acumen. Born out of the realization that the design practice drives understanding not just aesthetics but also strategy, Rasa Samvada is a platform that bridges the gap between design passion and entrepreneurial wisdom.
Today, we're diving deep into a crucial tool for businesses: financial forecasting. It empowers businesses to make informed decisions, allocate resources effectively, and navigate potential challenges. But it's more than just predicting numbers. It's about shaping a vision for the future, grounded in data-driven insights with thoughtful planning. Today, we have the honor of welcoming two incredible architects who have not only achieved great milestones individually and for their respective firms, but have also been instrumental in shaping the architectural landscape of Bangalore. But beyond their knowledge, what stands out the most is their humility and their unwavering vision for the future of design. Their ability to inspire, push boundaries, and create meaningful spaces is something we can all learn from. So let's welcome Naresh Narasimhan and Arjun Nambisan with a huge round of applause.
Arjun, how can one identify the right scale and structure for their office, and what stage one must do that?
Yeah, to start with, the mistakes that we made and clearly something that when we started an office, we just started without knowing where we are going, without having a philosophy for our firm, right? And if you largely look at it, there are four types of offices that you could have. Now, when you all start off, do you know where you are, what do you want to do, and what does each of those sizing mean? If you're a sole operator, the overheads are less. You don't have to have that many processes. You don't have to invest too much in your overheads and your systems in your office, right? But as you grow, you will see that things start getting important, and the survival of your office very often depends on that. So, you can read and see what it would mean to where you stand, each one stands, because your planning for the future and the coming year is really dependent on where your office is. Largely, I would think we are somewhere between the second and the third type of office, more maybe the third type of office. Naresh is probably closer to the fourth type of office. So you'll see that the processes that we have in our office is very different. So when it's very small, you're looking, you're operating very, everyone puts on, the first two types of offices, you're doing multiple jobs as a person. But as you go in, you know that specialization is something that is required. And that's something tough as architects, that we, tend to let go of certain things, which is a must. And a lot of us, we should have finished our financial planning for the coming year in December, right? A lot of us are just right now thinking about, okay, now the next year, what are we going to do? Where's people? So your size of the office determines what aspects of that planning you can focus on. For example, if you're a sole entrepreneur, you don't have to worry about the number of jobs coming in. You just have to probably worry about delivery and your free time. As you have a smaller office, you're looking at perhaps what is it that you're looking at the year previous to see what went wrong and trying to forecast things that you would. So the forecast for each of these offices is going to be very different. So what I can tell you about my office forecast will really come under the third business, right, where we have over 50 people working, and it's much more complex. But if you're doing a forecast for a sole entrepreneur, it's a lot easier.
How do you plan for explosive growth? You can all decide, each one of you have to make the decision, right? Do I want to build a large practice, and if so, what kind of practice, etc. But many of you may also choose to stay small and say, no, I want to make sense. I don't want to make any money. No, so, correct, no? So you can do that. So, but that is a call each one of you have to take. So, but making money and making sense are not, exclusive to each other. If you're clever, what we will show you today is what do you do to get outsource the things that you don't want to do that are inevitable with growth. And if you know what to do and you are aware what to do, and you do it once or twice yourself, however much you might hate an Excel spreadsheet, then afterwards you can tell somebody else what to do, and they can't bullshit you later saying, you know the principle of it. So I think we have to focus on that 5 to 10, the 10% office. Now, how do you go from incremental growth to quantum growth quickly? How do you do it? That is the trick. And most people will keep on doing 10%, 20% a year. What if I said, can you grow 100% next year in one shot? Is it possible? To do that, you need some extra smarts.
Diving a little deeper into the extra smarts, through our research with you all, we uncovered that there are different pillars of finance that determine the financial health of your company at the moment and how you gauge how healthy it is or not. Naresh, if you can shed some light on what those pillars are primarily that you keep your eyes on.
Broadly, a firm is structured always like this. Whatever what is the most important number is net. Okay, what is left over for you if you're a small firm is extraordinarily important to establish, and you can't say whatever I can make. Otherwise, you'll burn out if you overdo it. And if you underdo it, you will feel regret. So how do you right size it? How do you know what you're going to do? And you will know if you already worked if you've got 5 to 10 people, that means you've been working for 3-4 years. And you worked for 3-4 years for somebody else also. So you've seen some other world, how it works or how it didn't work. Maybe that's why you left and started your own. Usually the reason, right? But you will know. And based on that, you have to, make sure that however boring all this is to look, don't leave it to somebody else. Initially, as you grow, you will find that person whom you can trust to do this job. But all these heads are very, very important to track on a daily basis.
If we look at I think there are 6 pillars that are there. Your revenue covers all of that. So if you map your revenue to what percentage, do you all know what percentage that you are spending on each of these pillars, right? And that is a planning that we now incorporate in our work. So clearly, I mean, there are different equations for different sizes of offices, right? I can tell you for our office, we have a system where which is a 25, 25, 25, 25, right? So if you see the last one, which is the profits, the corpus and the taxes, together becomes one pillar where we are saying that's 25% of our revenue. The taxes, we're talking largely income tax that you pay, right? And the corpus is something that we're going to set aside. It's still part of your profits, but you're keeping that aside. And then the profits is what you take home. For us, the partners' salaries will be 25%. The architect salary is 25%. The office overheads expense is 25%. And the last pillar that we've put together is 25%. So knowing what you want, right? So if you read books about it, they'll tell you that your salary should not be for a consultancy services. Your salary, including everyone's salary, should not go above 50%. So we follow that, right? 25 for the partners and 25 for the architects. Smaller offices, you might play around with the percentages, but you need to know going forward what is the percentage that you would like to follow.
For a firm as large as yours, Naresh, what is the percentage on average that you all follow?
Almost similar, but in a large firm, we are continuously audited. Like it's a large turnover. So what happens is that we normally do 33, 33, 33, and 33 is the same, like what I said, technical salaries, 33% non-technical and overhead, and 33% is the target gross profit. But you never get it. And other 1% may be charity or whatever, you can decide that yourself. Whatever that last 1% is left, you can do what you like. But it's fairly, that should be the target. And then what people don't do is they'll quote based on that, and they'll never do a post-mortem analysis. After the job is done, was I right? And if there is a change, why was it there? Why did it happen? There might have been mitigating factors. Client won't pay the last amount, something will be there, or you will get some finish would go wrong and they'll minus some fee from you. Anything will happen, right? But you have to, if you don't do post-mortem, and that's like a golden standard, 33. What he's saying is the same thing, but he's putting the last thing as a bracket for taxes and corpus separately. But it's the same thing. A part of that profit, 10% of that profit, gross profit goes towards corpus, right? And all of you also will be struggling with now as the turnover rises.
So I think that we are talking to a lot of people in offices, I think more like they are 2.5 to 3, and that's where a lot of them hit a glass ceiling is what I feel, that, and which is what it just happened to us. We hit a glass ceiling at around 3 crores is where we were struggling to now. For 3 years we were...
For most people, it's a concrete ceiling. You can't even see what's there. So what happens is many of these firms, I notice, transition to design build. Because they see the contractor making 5 times as much as them and say, but it's like if you know what is on the other side, then you can take an informed decision. There's nothing wrong in getting into a design build kind of space. But then you will start looking at the job from a contractual viewpoint and not necessarily a design viewpoint. You won't push design, you will push delivery. And you cannot help it because the risk is much higher and so on and so forth. So at that point, you have to be very careful and be aware, why am I not growing? How do I go to the other side?
What did you change, Arjun? You said you all were stuck at the 3 CR for 3 years.
Yeah, I think just the fact that we didn't have financial planning, and I'll be very honest, it was just, at the end of the year, you're so caught up with now, okay, what are the salary hikes I have to give, and you're caught up with that. You don't do any planning. Luckily, we had all of this information with our finance side. So when you take it and then start breaking it down, you'll understand where you're stuck, right? When you have a formula and you say, this is the formula I want to stick with, right? Let's say now I've ended last year with 3 crores and I feel there's a correction, and for the coming year, I need to do 4 crores. So I'm looking back and saying, where am I falling short? Right? And that planning. So we didn't have any planning. It was just a very organic way to grow, and which is what something Naresh might not, because I think when he got into a system and he's created a system, which is why it's so amazing, right? But for a lot of us, we've started small. We started with a boutique firm, and then we grew up, and then we don't know how to handle the things, and people will not tell you formulas. So we worked it the hard way. We created our own formulas and started working and analyzing it. So that changed, and then that's where I'm seeing the glass ceiling. At that point, we were able to break, right? And every time there's a ceiling, glass or concrete, you can break it only if you have a strategy for it. We are hoping to break it by just doing the same thing that we did that got us till there. Right, and I think that change is what we really need. And for us, for BNA, it was a complete shift in attitude where we started looking at processes, right? And for example, when you look at now, if for the coming year you're going to do 4 crores, now there are matrices that we'll talk about, some of the matrices, right? The revenue growth rate. Now, typically should be what they talk about, maybe 20% year on year is something that they would say is standard. But I would look at something saying there is a correction period. Is your revenue now, I mean, what Naresh said is that the offices in the second business type should be around 5 crores. Now, what if you're at 3 crores? What if you're at 2 crores? There is a correction, which means that your financial module is not working for the way you're doing business. So that correction should come, and that correction could take up to 2 years to make that correction, because you can't have, I mean, he made a point, can you make that big jump, that big leap, do a 120% turnover change? That will not come in the way we continue to work, right? It has to come with change.
See, one of the tools that, there's a guy called Wilfredo Pareto, who was the economic advisor to the Doge of Venice in the 16th century, right? So this guy came up with this deadly principle. It's a business principle called the Pareto principle, which is called the 80-20 rule. So when you go back home and when you go back and look at your company tomorrow, start bucketing like this. From where did the money come from in the last 1 year? Did all the money come, 80% of the money came from 20% of your clients? That number will go 70-30, 80-20. It won't be exactly 80-20, but it's called the 80-20. Everything in life also is the same. 80% of your problems comes from 20% of the people that you meet. And this Pareto principle is like a life lesson, right? So, but applied to finance, you will notice that 80% of the problems in your business will come from only 20% of the issues. And you have to be aware of that. People don't, and what we make a mistake is, we spend 80% of the time on that 20% of the issues. You should spend only 20% of the time on 20% of the issues and put your energy where you're really doing well. So we have a rule in our office at least. Every year on the first week of April after the financial year, once we are like past that March 31st last minute bill collection tension, right? And we always sit on the first weekend of the next year, and we have only one thing to do. We make 2 pie charts saying whence it came, where it went. Right? We have this pie from where the money came and how did we blow it up. Just 2 charts. And then on the left side, we have a drill down. Who from in that thing, who paid us what? Which client? Just like a pizza slice. Take the bottom 10% and kill them. Drop them completely. So you can judge them. There are 2 methods, right? One is how much money they gave you, and in how much time did they give you that money. You have to have a double calculation. If somebody gave you 50 lakhs, okay, in 2 months, that's the weight of that is much more than a guy who gave you 50 lakhs in 2 years. You only look at this year, what did I get from this fellow? Not the total fee. So for my projects, sometimes go on for 5, 6, 7 years. You guys and all, project will end in some 3 months and you got your money and you will run. But as you grow the project, timeline will extend. And you know that, particularly with these real estate fellows. It's a never-ending story. I am doing one project now, it's 17 years now. And still the client is saying, some little clubhouse, please make change. I told him, you're a mental. I mean, no, it's like a huge thing. It's about 53 acres or something. And we've been working on it for forever. So how, and the client still thinks he has to pay us what he told us in 2008 or something. So you'll have crazy cases like that, but you will notice that as you grow bigger, projects take longer to do. So it's always important to do this calculation in the first weekend of the first year. Who didn't, and ruthlessly drop them. It will say, hey, I should not give it up, it's cash flow. But if you don't do that, you will not have the space to expand. So always argue the payment terms before you argue the fee. People make that mistake. First you will say, I'll want fee. That fellow won't pay you for a... First, when will you pay? You know, there's a joke like that. No, my younger brother, who was my partner at that time, went to meet Frank Gehry once. All of you know Frank Gehry, right? And Frank Gehry is one Jewish guy, full business buddhi, no problem, fancy architect, but very clear on the guy. And my brother actually got into some social situation with him, and he was having a drink of beer or something with him. And then he said, Mr. Gehry, can I ask you a question? What fee do you charge? How do you even charge a fee? All it looks like he crumples some paper and it becomes throws it like that and it becomes a building. And it looks cool for some reason. I mean, it's not clear, right? How do you even cost something like that? I mean, you can't use AutoCAD to draw it. What do you do? How do you even make it? So, and Gehry replied saying that, usually it's whatever mood I am in. If I like you very much, it depends. If I don't like you so much, but I still want to do the building, whatever he feels like, some $5 million, $10 million, some number he borrows. But then he told my brother that it's more, actually, my payment terms are more interesting. You know what his payment terms are? 100% advance on the cocktail napkin sketch. Working drawing free. So it's like that is your ideal payment terms, right? Because really speaking, that's perfect charging strategy for an architect. And nobody in the world except Frank Gehry can do that. Whatever small sketch you give me all the money. Then we'll see. Yeah, but so you have to balance it out. So you have to see who is... You can easily do that analysis, right? Who paid you, and we'll come to what did you blow it on later. And drop the 10% in the bottom, however hard it seems. Even if it's your cousin, say no. So I wrote to all my clients and say, from tomorrow the fee is double. Instead of saying, I don't want to work for you. 15 of them replied with, you know what, get lost kind of, we're not going to pay you. One guy replied saying that I'll pay you 50% more than what I'm paying you now. So we kept them. And the 15 we got rid of in one day. We just said, this is it. All your projects have reached a stage. Here's all the drawings. That's it. And it curiously opened up the office. Some 15 people became free. And then we could use that bench to go and pitch for more remunerative, better clients. It's not very... Anyway, there was just like if somebody quits your office, you have to give notice period, no? So we gave all the clients 2 months notice period. And in 2 months, we also replaced it with other jobs. So the architects didn't really get a gap. They were not sitting around doing nothing and all that. But that was a good exercise, and I think every firm should do that every year.
Can we afford to do that when we're a really young studio?
That's what even I made that mistake. That is what you should do when you're in a young studio. Otherwise, you won't grow. You will not have the space to grow.
But what did you do in that 2 months? The 2 months they'll expect you to do the whole design.
No. I thought of this 2 months before that. So in that 4 months ahead, I got new jobs which are better and gave it to those people when their jobs got over, they had one more waiting.
Even the client is in 2 months.
Correct. So I brought it up to whatever stage they had paid. No, 50% means, okay, here's 50% of the work. You are free to. And we also gave them a list of architects who would work at their fee. Younger firms were willing to take a bigger risk. And were okay with that. We can't do it because our overhead is going too high. We wrote a very polite letter. I can share it with you once if you want to. It sounds like very, pavam type. But it isn't. And nobody got annoyed with us or anything like that. Many of them said, we can't pay you anymore. So we said, thank you very much. It's great working with you and all. Bye. Okay, bye.
So, sorry, I'll just add, right? One of the things that when we started looking at it, we looked at the way lawyers charge. How do they charge? By the hour. How do we charge? Lump sum, square foot, okay, 7 years, 17 years. how does it make sense? So if I were to ask you all which is your most profitable job, 90% of you all will tell me your biggest fees. We are not equating that to the time and the resource, which is what he said, the efficiency of a job to, and what he's saying is absolutely something that we have done, and we are also going through that process. What he just said, removing and kind of sieving out that 10% that you don't want to work. You will realize, we do a lot of high-end homes, right? And everyone thinks, oh, these are our big jobs. And I'm looking back and I'm looking at now, so I'm the one analyzing a lot of stuff in the office, and I'm looking at it and saying, it's a cheap job. It'll equate, because these big houses go on for 5 years, then for marble you're going 100 times to pick that one 10 square foot of marble. Where is the profitability in something like that? You're looking at the number, getting very excited because it's 1 crore or 2 crore fees, but over 5-6 years, what does it come to? So you need those matrices. So the matrices that we talk of now are those matrices that allow you to understand what profitability is.
All these things you need to start tracking, and don't think it's only for big firms. Start looking at each of this. You'll be surprised. There's some beauty in mathematics and beauty in numbers. And once, as an architect, you can start seeing patterns. Right? You can start seeing patterns. And the moment you start seeing it, you'll realize what you thought you're making money out of is actually not the right one. Something else which escaped your attention, you actually made a lot of money out of. And you should start focusing more on those kind of jobs rather than doing whatever comes your way.
Yeah, I'll just pick up one thing, right? Okay, let's talk about the revenue per employee, right? I think that's point number 3. What does that mean, right? So when you look at the man hours you have, right? If you're looking at an 8-hour day, a 5-day week, and you're calculating
42 hours.
Yeah. So I know for one full year, minusing the holidays and their holidays, it's 1,808 hours per person that I'm getting in a year, right? Now let's say I have 10 people, so that 1,808 becomes 18,080 hours. Now my revenue target is 2 crores. Then you will look, and if you divide the two, you're getting what each person's target should be. So when you calculate target for your team, you're actually looking at these numbers and saying, now that person, let's say it'll come to maybe 2,000 rupees an hour. So you multiply. So in that year, that person has that. So that is one way of looking at it. The other way of looking at it is if you go back to the earlier formula that you have, right? So 25, 25, 25, 25. A very healthy target is I take the 25%, which is the salary of the architects, and that's my work engine. And the target is 5 times that, right? You'll say it's only 4, but you need to have the buffer for teams that do well and don't do well. So the target is 5 times. So they will say 3 to 5 times depending on your structure, the size of your office. So then you're getting clarity and you're telling people what you're expecting from them.
If somebody is getting paid, say 5 lakhs a year in your office, he must be generating 25 lakhs in revenue for you. At least. That's all. If that is not happening, there's something wrong in the way you're structuring your office, or you're paying too much to somebody. You can keep on checking like that.
So if your expenses for your architects is equal, so sometimes what we have done is we actually 3 times is when you include your partner's salary as well, right? If you see our structure, I have kept the partner's salary because there are 3 partners, and so we are part of our culture is to get in more partners. Right, we want to retire, we want to get in partners, so that's the structure that we've kind of understood. So we've kept that as 25%. But let's say if you're in the second business, you have 5 people and it's you, let's say 6 people, or you have 10 people and you, then you club both those salaries and it's 3 times. So it's 3 times of 3 times, which means that if I take 3 times, it will be for me into 6. Right? Or sorry, if I took 50% of our salaries, then I'm looking at 2.5 times. Right? My target, if I take both the architects, so if the partner's salary and the architect's salary, if I take it together, then I'm doing it into 2.5. You have said 3. So you see that we're all in the same. It's not, the formula is absolute. Whatever jugaad you do and come to, it will be in that range. So, but it's important for you to know that there is a formula that you have to follow and that you have to analyze at the end of the day.
Probably the most important metric in that is number 8. I'll tell you one simple formula in life. Life is cash flow. If the cash is flowing, life also will flow. It means at exactly 9 a.m. tomorrow morning, how much physical cash can you get your hands on? Right now, including all, forget where you free cash, not where you live. I'm not talking about the value of your apartment or how many computers. How much is available to you at that you should know that number every morning. And it's quite easy. It's a very simple Excel formula. It'll tell you instantly what to do. And only if you know that, your decision making on hiring people, or whether if the cash flow is high, and if the client is behaving in some annoying way, you can say, I don't want to go. Otherwise, you'll get scared and take on a client which you don't want to, because you don't know this one number. Assuming you have a turnover of, say, 3 crore, and suddenly you find tomorrow morning that you have 1 crore sitting in your bank account, which is available to you. And some guy comes to you with a poor proposition. You know that you have that 1 crore game to play with, and you don't really need anything for 2 months. I'd rather wait and see whether I get a better opportunity than take this one. You cannot take the decision unless you know this number. And also you know that you have a buffer that, you can run the office for about 3 months or 4 months without getting tension. Saying where is the next meal coming from, kind of thing. Okay.
I'm so glad he's brought this up, right? Cash flow, I think about 3 years back, is when we looked at it, I'm looking at the chart, the financial chart or the dashboard that we have, and we start making profits in December. Okay? We started in December, and then, March, there's like a flurry, or actually picking up, what you should pick up in a quarter, you're picking up in that month. And what you realize is we can't plan anything, because everyone says, oh, you're doing well, but you're actually, it's hand-to-mouth existence till December. Then how will you deploy funds for other things that you want, And so it's very important to understand every month how much money is coming in, because your expenses, all the money that goes out is not on a high frequency. A very variable. It's all fairly standard. You know where your AMCs will come in when you're planning to hire a new person, or when your insurance needs to come up, or your software renewals have to come up. Do you know are you planning so that the money comes in before that? No, we are planning all our outflow, but we are not planning our inflow. Now again, the cash flow comes to projects even, right? Where you've worked a lot and then worked too much, right? And then the cash flow, you see the flow, that's your outgoing, is more than your fee that's come in. On both these counts, if you all do not remedy that, right, it's a lifetime of tension. You can't do anything.
And if people don't pay on time, I charge them interest. And it's there in my agreement up front.
It's there in a lot of your agreements, but how many of you all do it?
No, you just have to charge them one time. Then they'll never make late payment next time. Even if they don't pay you the interest first time, second payment they won't delay.
I think that's another point, right? We are very embarrassed to ask for our payment.
There's some very interesting dashboards that both your firms take a look at. Arjun, your firm on a more weekly basis. If you can just walk us through those dashboards.
Yeah, no, I swear to God, the moment I started looking at all of these things changed in our office, right? And people, I mean, I'm out there telling people, youngsters now, please incorporate this as early as possible. Maybe once you're much larger, the dashboard gets a lot more complex, but have a simple dashboard. So you must have that dashboard to look at any of these things, right? I mean, there's 6 things that you're looking at. Have it, and we look at it every week, and that is the time best spent.
You have to populate this thing with data. I've also given some explanation what happens, what is the need to look at all these things, and I'm sure you will share this with everybody, right, later. So, and you have to keep your eye on those bottom numbers, profits to earnings ratios, and also that what is called average accounts receivable days. Every time you raise a bill, how long does it take to get the money? Do you get it instantly? Do you take 60 days? Every time your money is in somebody else's account, it's earning money for him, not for you. The faster you get it into your account, it will start earning money for you. And your investment should come out of the money which is in your account, against which any bank, because of this MSME, will give you an overdraft on call, without collateral. So use their money. Don't use yours. But first you have to, but the bank will want to know how much money is coming in. You have to be able to explain to them. So a spreadsheet like this will quickly tell you how much actually, how the cash flow is happening and whether the ratios are in place. Then if the ratio is wrong, then you know what to correct.
I think this is picked up, the numbers might have been changed, but if you see that the office target is 6 crores and for the previous year and the current year will be 7 crores, and then each quarter there they've divided it equally and they've put it equally. I mean, that's the wrong way to do it. I think your first 2 quarters should be 60% and your last 2 quarters 20%, because your last 2 quarters you're doing a lot of planning and signing up for the next year to come. And this also is a result of your cash flow. Get a lot of your money up front, right? So when you look at that, you'll have the target. It says projected, so if you see Q1, it says projected, the office target is 1.8 lakhs, right? The associate goals are those if their personal goals are higher than your office targets. The current consultant cost, so we remove the consultant cost from our profit. So those go out as expenses. So it's not considered in their income, right? The projected that we have 1.75, which means that 1.75 lakhs of worth is already there in their kitty. And then what is billed, which means that the work is done and it is billed, so you know that the job is done by the architects. You'll see what is collected, because collection is a big problem for architects, right? So that's how our dashboard tells us. So a lot of the times we bill, if you see there, you might have billed, if you look at, because it's an old one and I think the numbers are fabricated, but very often you find that, let's say if I foresee the coming year projection, let's say for April Q1 of 2025, you will see that my projection, what it says is the projected projects will be 80% of my target for Q1. My build at the end of the month, I should be able to billing means you're finishing the work and sending the bill. That largely is in your hands. We should hit a target of 90% of what is projected. Collection is where we struggled for a long period of time, where we were at 60% of what we have billed. So clearly our office realized that we have a problem with collections. And that in the last year, actually, we put in remedial steps to even eradicate that. Of course, it's not with the success that we kind of have, but we continuously work on it. So it told us where we were struggling. So once we had clarity in the work we had to do, we were doing that because that's completely in our hands. But collection was a huge problem. So that's where we changed from we just did a monthly billing instead of looking at doing it on stages, because some person from their office will say, oh, this one drawing is not done, so your stage is not incomplete. So all of my work I said, we figure out a way to handle it.
Naresh, you had a very interesting way of stable cash flow, no? With respect to your builders.
Yeah. So, it may not be true for all of you, but what happens is that I love repeat clients. It's called known devil syndrome. So they know I am what devil I am. We also know what devil they are. It takes one entire job to figure out the devils, the other side. But after some time, you accept that and it becomes like one. So a repeat client is 4 times as valuable as a new client. As long as, of course, all other factors being correct, they pay well, they appreciate you, they think you're a great person, all that good stuff. And you also think that they're worthy of your respect. But a repeat client, so we make a lot of effort to keep these repeat clients. And what happens is now is a firm like mine, you guys have still an entrepreneurial design firm. Say Arjun's firm is like a large consulting practice. But firms like, once you cross about 150 people, we are right now about close to 250 people now. It's a little out of control, I know, but it's like, and you guys must be about some 60, 70 people. So what we do is, we tell our clients that we are not a practice, we are not an office, we are a platform. Slightly different positioning it is. We're a platform. We are not, whatever your problem is, we'll fix it. But in return, every month you pay me 25 lakhs. Fixed. Whether I do work for you, whether there's anything going on or that job is on hold, I don't care. It's gone for sanction, I don't care. And it doesn't matter to me. And many of these clients give us 4 or 5 jobs at a time, particularly real estate builders. Right? And it's roughly the same thing. Apartment, some more apartment, and then some more apartment. It just goes on endlessly. Like that's their job, to build those things and sell them. So we get paid like a salary by the builders. And what we do is adjust the total salary overhead and salary component of the office. Right? Completely. So that a bunch of people whom we build endlessly for, they pay us monthly, and every 6 months, as the jobs get over, we go and top it up. Suppose one job gets over, and the job you're supposed to be paid X. And every month we allocate what they paid to different jobs, depending on the progress of that. Suppose they gave us 5 apartments to do, right? And one is under high construction, one is concept stage, one is gone for sanction, one is still under some contract tender negotiation. So each one you would have done different works. Maybe you wanted to charge 30% for the first one, 60%. So if you get 25 lakhs a month from them, you put 5 lakhs here, 3 lakhs there, 10 lakhs there, and the job will get over. Every 6 months I have a meeting with the client. It has 2 advantages, right? The first of the meetings in the 6 months, you go and say, okay, this job is over. We already allocated 70% of the money to it. The balance 30% is the 25 lakhs. Give me all that right now. Then I'll sign occupation certificate. Now they don't care about that, but earlier we have some way to get that out. And clients are quite happy. And what happens is, in your cash flow, you get chunks of money. And that chunk of money, you can use it cleverly. Right? And at the second meeting, which always happens for me in April every year, you increase the fee by 10 to 15%. If you notice, foreign architects coming in, they're getting the same square foot as us, but in US dollars. It's 80 times more. Really ridiculous it is actually. Norman Foster is doing a building in Bombay. His fee, it's about 3 million square foot tower in the heart of Bombay. Guess what his fee will be? It's 1,000 rupees a square foot. Okay, that sounds okay to interior guys, but for architects, for architects,
yeah.
but if you divide it, okay, if you divide it, that's $10 a square foot. How much is that? Some crap. And the builder thinks that's a TK. And I think this is the thing we all have to. We should start charging in euros or.
Yeah, I know.
Same
Seriously.
amount, but pay us in dollars. That's all.
No, it is. If I think one of the questions you would ask is how do we structure our fees, right? What do we pay people? I'll just tell you a little. It might be a little off the topic. I think there's a bunch of firms that we got together and said, okay, what do? We must start talking about better fees. And I'm saying that our industry is set in such a way that you can raise your fees, and you should look to raising your fees. But there are a lot of things that you don't understand is that the profitability from these fees, right? And in firms like ours, when you're starting and you're running very highly, not an efficient system, right? Whatever you up your fees, you'll struggle to make that profit. So if you look as much as how do you bring in efficiency in the way you work, I think you can still look at a profitability that looks much better.
Yeah, it's important.
To take a look at profitability, one of the main things you spoke about was also understanding the value of your time and your employees' time, for which a very key tool is timesheets. And I don't know if 10% of the people sitting here are doing timesheets and religiously looking at that data.
When you have to understand these are systems, if you look at the successful offices, they have these processes. And yet in our mind we are saying, no, it impinges on my creative mindset. You can be as creative as you want, but if you're not profitable, how will you sustain that? So you've got to change your thinking, which is very difficult. I mean, you'll realize this when you implement it. You were on the other side of the fence when you were working for someone. Now when you're the bosses, you're on this side, and you'll find out how difficult that is.
That's what they always say. I think at the mid-sized firm level, do you know what is the maximum motivation to meet a deadline? It's called last-minute panic. But don't do that. I mean, you'll just burn out. Many firms I notice, they actually valorize sitting overnight. Hey, night out, martini. All that is over with college. Now you night 7 o'clock, go home and have a drink or something.
Yeah.
That is more, I mean, if you don't get that balance early in life, you'll keep on doing crazy stuff like that and actually thinking you're doing a great job. You're not. That means you don't know how to make operational efficiency part of your DNA. The biggest firms in the world shut down at 7 p.m.
So one of the things that when I was analyzing, I said, listen, a lot of the commercially successful firms have a planning app, right? And they do timesheets. Two things, I mean, in my own jugaad way, okay? So I kind of looked at it and said, why don't we implement this? So the timesheet we had to, so which means that we got an app that gave us, and then we started looking at planning apps. Okay, we started with one, we moved on to the second because a little more nimble. That planning app is superb. It takes a project, it tells you how many hours, how many people, what has to be done.
What app do you use?
We are using now, we started with ArcEasy, then we went to Teamhood. Teamhood.
How do big companies run? Why are we struggling? They use a software technology called ERP, called Engineering Resource Planning. It's a planning software. It's an app. It's an app it's a software, whatever you call it. So what we did, but the engineering ERPs are focused towards manufacturing, to making a product, right? But what we are doing is not a product. It's a service, but we wish we would get paid like a product. Like what happens in a product, you want to buy a television, you go to one shop, you give money in left hand, you get television in right hand. But what do architects do? You are not selling a television, you are selling a good outcome or a good, like a goods or whatever you want to call it, that doesn't exist. It's only in your head and in your imagination and some 3D views and all you have made. It actually doesn't. And you're telling the client, no, this is going to cost you 10 crores, give me the money. So how would you do that? How do you sell a good that doesn't exist? It's an existential problem actually. So you have to use tricks like this to be able to leverage how to position yourself so that you are predictable, you are able to do it, you have got past experience. All these things count. And clients instinctively know whether you can do it or not.
So one of the things we've connected, right, is that when you have a job and you have an effort map, so if a job takes 200 man hours, I know what each man hour costs in my office. Let's say, it's 2,500 rupees per hour on an average. At different positions, you'll have different man hour, right? You look at the 1,800 I spoke about by the salary you're giving into 5, which gives the revenue that each one has to give. You know what is your man hour cost. Now, if you divide that man hour cost by the fee, it will tell you how many hours, man hours, that job should be finished in. Have you all understood? You want me to repeat that? Right? Now, if I know a job has to be finished in 200, my planning tells me is giving me only 200 hours. Now, I might finish the job in 250 hours. Now, where did I spend that extra 50 hours? I need the app to tell me that. And that is where it is a game changer. I've realized all the companies that are profitable and doing well all have an app.
It's a BQE, used to be called Aki Office. But BQE has a SaaS model. Even if you're a one-person firm, you can literally use it for free. And as you go to 5 people, you pay, 10, 20 people, you pay more and more. There's another one which is even a nice one for smaller firms called Monograph. Check that out also.
How do you charge optimally for a project?
Billable hour. What does that mean? Billable hour is every bit of time, whether you're drawing, whether you're thinking, whether you're sketching, whether you've gone on site meeting, everything is a billable hour. If it takes 1 hour to go to that site meeting and the site meeting is 1 hour, it takes you 1 hour to come back, 3 hours is gone, not one of that person. That if you're paying somebody 10 lakhs a year or 10 lakhs of whatever, 1 lakh a month or whatever, and that guy is working only for 40 hours a week into 400. So each hour you know how much it costs. And if you're putting 3 people on the job, and what will happen is in a job, the capacity of people will change over time. Initially you will put your time, that's costliest person in the office. Next you will put some second level to draw, that will cost a different cost. So you have to have an average, and then you will have drafting, people who just draw the damn thing for you, that will be the lowest cost. Then you will have an estimate fellow putting an estimate calculation, that is also a billable cost. Okay? And then you will have an office boy who brings coffee for you, that's an overhead cost. That is not direct. So you have to distinguish between direct billable, which is on the client, and which is who is the overhead. There will be rent and electricity and all that. There will also be people on the overhead side. So effectively, how much average that job is costing you per hour, you'll be able to easily calculate. Right? So like Arjun said, your income must be 5 times that target. If you're not getting that income, something is wrong. Or you make a decision saying, no, I want that client, I want my foot in the door, so this time I'll give discount, I don't mind making only 20% profit. But next time don't repeat that mistake. The same client, once they get used to a lower fee, it's very difficult to change their mindset and say, next time you pay me more. Okay? The other way to do it, when clients argue with you about fee levels, suppose somebody says you think I should get $100 a square foot for this, and that guy is offering you $50. Now what to do? You don't want to lose that guy. some big shot client, you know the bugger's got potential, you don't want, what do? You give up value. You say, okay, I'll do it, but estimate I can't do. Or you say, engineering, some AC guy and all has to come, you pay separate. So you give up every time that fellow proposes a lowering of the fee. You give up value of that much back without them understanding what's going on.
I mean, I'll give you an example of something like this recently, right? When we work with builders, our per square foot charge is quite high. And they're all saying, oh, it's too high, y'all are doing, only all these fancy homes, it's not a fancy home, this is what you should do. So what we do is saying, listen, you pay me 3/4 or half or whatever of the fee, but in 6 months I'll give you everything and I'm out. Right? Then I'm able to manage that because it's so much easier. I'm still giving up a little value, but I'm looking at the cash flow advantages. So I'm actually trading it off for cash flow advantages, which means I'm saying, damn good, if I can just finish this effectively, I'm way ahead in all my other matrix that we follow, right? So you can look at, so the solution is not expecting the client to change. You need to be, when we started, I said it's important your philosophy, and I always say this, I'm a huge follower of Bruce Lee and his philosophy of water, right? You can't break water. Whatever you do, it will find a way through. Most architects, it's a nightmare for them because if it rains, it finds a way through the slabs, right? But if you're able to, your clients are not going to change. You need to make those changes. You need to adapt to how you can make it profitable for you and give up certain values. And it'll become profitable.
And probably I'll end here. I think we're running out of time. And so one of the things that as you grow, and firms like us have realized it some years ago, we will not get picked by a client. We will pick our client. And every year we sit and decide, these 20 fellows, we understand that they are good clients, we want these people. There are various reasons how we choose that, with past experience, who have we worked for, in that sector, why have we not worked for this person. You pick, then do deep dive research on those fellows, including that bugger's dog's name, everything you'll know, everything. And then if you approach a client like that and say, look, I know you're doing this. I know you already have somebody else working for you. And here is a unique proposition that I came up with, I think which will suit you very well. Most clients will say yes. They'll at least be willing to meet you, willing to talk to you. And if it works in that meeting, you go into meeting 2. So rather than getting tension saying, where am I going to get the job from? The whole focus will shift on which client do I want as my client. So who do I want? In this segment, who do I want? And every builder is not the same, right? And every corporate is not the same. And every segment of work, like for instance, there are 30 jewelry vendors in Bangalore. I'm sure some of them are real pains in the neck. And that just by the industry grey point. You say, no, this guy looks like a good guy. And you can easily apply the discount. You say, okay, for entering the thing, I'll not like crazy discount, but say, okay, I'm willing to go this extra mile or good fee, and I will provide this extra service free of charge, whatever it is, however you want to position it. And it's quite easy to do that as long as you change your mindset and don't be only at the receiving end. You also be assertive and attacking end. That's not very difficult to do.
Just a quick one. What's the criteria to calculate the incentives and bonuses for employees? What should be the right mechanism?
On profitability, how much profit you're making. So I'll tell you what we follow, right? Once I have a formula out there, whatever we make, that percentage will go back as salaries. Okay, so earlier now I'll tell you, this is a very interesting question because all this while we were giving a compulsory bonus, let's say a 1 month's bonus. But when people move from one job to another, they are not look. That's almost an 8% addition to your monthly. But when they say, oh, someone's paying me so much, I'm going, they're not looking at the bonuses and insurance and etc. that we're looking at. So from this year, from the coming year, we've removed actually that bonus and put it into this thing. And bonus is now purely on profitability, and which I think, I don't know what Naresh does, but I think it's very fair, because we have committed and said, the moment I give a formula that I'm following and dispersing my amounts that way, however well I do, we make sure that a minimum of that percentage will go back to salary. So we are then at the end looking at people's performance. And here's another thing that we talk about is the review system for people's performance. You need to get an expert. We went out, got an expert to kind of actually mark it so people can say, I've scored so much, I'm expecting that review, right? So based on that, based on the profitability and based on the review, we give them the...
We follow a slightly different model. It works more balanced for larger firms. So what we do is, see, our office also has tenure issues. There are more than 25 guys in my office who have been there for 20 years plus, right? So they all, just by this increment model, all of them walk off with lots of money every month, which is good, without them there is no office. That is what keeps the engine going. So what we do is roughly about 25% on tenure, how long you've been hanging around. It's a weighted percentage.
Yeah, we do that as well.
The weighted percentage is 25% on company profitability, 25% on individual project profitability. Then suppose you are handling 3 jobs for me and you are like some incredibly profitable, whereas your colleague who is also handling 3 jobs for me is not as profitable. Obviously, you should get a little more than the other person, and it's only fair. Suppose you can handle 5 things at a time and the other person can handle only 1 thing at a time. All of you remember, even Elon Musk and Bill Gates have only 24 hours in a day. Elon Musk makes about $20 million a day or something like that. That's the slide. But he also has same time. So people are different in their capabilities. So you reward them like that. So 30% on tenure, 30% on company profitability, 30% on project group, that is the team profitability itself. Not just that one person, there'll always be a team. There'll be 2, 3, 4 people in that. And 10% is your discretion as top management. So you can use that last 10-15% to if some really outstanding person is there who's exceeded their targets and has gone mad, you say, okay, you take 40%. Keep it, it's yours.
But when do you pay this out? During the end of the financial year, or this Diwali thing generally works?
What we do is, we don't have an appraisal model. It's not possible to do all that anymore as you grow. So what we have is something like a continuous coaching, and it's roughly twice a year. And we used to have this problem that is linked to Deepavali and all tension creating problems. You should just keep it without any milestone event coming there, roughly once in 5-6 months. And usually at this time, when the financial year changes, we take about a month more to review and agree, but we pay retrospectively from April 1st.
So do you all have an office structure? Right? This is the office structure, this is where you are, and you've got all these names. Where can I grow and what does it take for me to grow? No, it's just there, work, I'll tell you if I feel like it. So you're which is what encourages everyone to just start and leave and start and start on their own, which is not good for our industry, because everyone's starting and then they're charging much less and then you're cribbing about it. So you point the finger at you. If you're paying them enough and you're making sure that they know where their growth is, a lot of them won't leave. I mean, since we're already on this topic, right? A question that I ask, how many of you, so I made another presentation a couple of weeks back, and I asked, and there were a lot of senior architects, right? I asked, how many of you all, with your experience, would work in your firm as an employee? Now I'll ask you the same questions. Same question. How many of you all will work with your experience in your firm as an employee? I bet not even one of you all. Why? Because it is not sustainable. Now, if we need to bridge that gap, if you want to have a sustainable, which what Naresh says, it's the people that he's able to retain. Right? Retention is a problem. You're cribbing about a whole bunch of stuff. So I took that. This is my existing. And based on my formula, I need to do a revenue of let's say 15 crores to make this is the current scenario, right? And then on a new this thing, I started saying, okay, this is what we should be paying them. Like he said, IT guys are getting 50, so I think I put 45 as what a fresher should get. And then looked at it and saying in 5 years you should be making 1 lakh. And I put that, and it became, I think, from 14 lakhs, and it was 23 lakhs. Right? That's how far away I am as an office to getting on par with other professions. It is also the reason, because it's so far, that I don't want my kids to do architecture. Right? And that is a shame, as a reflection on us, because we are not doing it. So I'm telling my office, damn, I want to get there. I've said 3 years, I've told them openly, I said I will get it to that level. I might fail, but I'm at least trying. Right? Which is the question I asked you, how many of you all will work in your own office as an employee? Only if it is sustainable. Then you have a ecosystem that's sustainable. For a business owner, what is most valuable is the final output. You sit at home and work. If you're giving me the same output, it's more profitable for you to sit at home. I'll give you the freedom if you take that responsibility. Absolutely, you're saying you have to deliver it. I don't have a question. I don't even care what you are, what you do at the office, right? But you make, once that delivery comes. So when it becomes a tool for HR to monitor and come in, and then I'm saying, I'm not here, but I did work for so much long. So then you're not getting an accurate assessment of my ability. And tomorrow, if you have to push me to a senior level, it will not show. So you have to get them to be very honest with their timesheets and use it as a tool to measure people, and don't use it as that final thing saying, okay, you are not there. There's in one of the sheets, you'll see that working efficiency should be about 70 to 80%. These are all normal things, but don't use that. I mean, when you work with people, there are a lot of other things that you have to consider. If a person is highly efficient, I don't care if he's working 20% of the time, as long as he's delivering. Right? So just look at it with a much wider lens.
How do you make someone grow? Correct. So they are on a salary basis. Now I want the guy to stay on longer. I'm saying, okay, you know what? My payment on this project is based on timelines. The timelines for any architecture project sometimes is random because a lot of things happen on the way. So I'm like, okay, I'll pay you, but if you're willing to stay. And the idea of staying, which is equal to when I get paid versus on a timeline of a project, does that work at all?
I mean, all the big IT companies grew like that only, no? I mean, learn from them. What did they do? They all instituted something called an ESOP. It's called an employee stock option plan. And you just have to create a variant where you say, okay, man, 10% of the entire thing is yours extra, but you don't get it now. It only vests after a year.
So the variable, what we try and do now, like I said, we were trying to bridge the gap, and part of that will be, instead of taking all the risk on the office, where we bring in variable pays, right? Saying, listen, I'll get you. This is now you want. Let's say if someone says, I want, I want to take let's say a lakh a month. I'll say, listen, I'm paying you 80,000, but that 20,000 into 12 months is what you want to take home. That we'll try and work for that. This is the project, and you start giving them targets, and then you start doing it.
Super. Thank you guys for being so patient. As we wrap up today's insightful session, we want to extend our heartfelt gratitude to everyone who made this possible. A big thank you to our venue partners, Square Foot, Gaurav, and his team, for their unwavering support and for ensuring that everything runs smoothly. Your belief in the vision of Rasa Samvada has truly helped us bring this gathering to life. A special thank you to Arjun Nambisan and Narasimhan for sharing their time, wisdom, and invaluable insights with us. Your generosity in imparting knowledge and your openness in discussions are truly inspiring. We look forward to continuing to learn from you and carrying forward the thought-provoking conversations sparked here today. A shout out also to the newest member of our Rasa team. Mansa, thank you for all of your effort.